Yeah, so basically today marks the first day of the bootcamp session, and we'll be covering strictly market structure. And in this bootcamp, because we always cover these bootcamps every quarter, or rather, we always do these bootcamps quarterly. And in this particular one, basically this being the first bootcamp of the year, uh, it will be a simplified one because I won't be going much around the bush. We'll just be going direct to the point, to what we usually deal with on the charts. So I don't have any place of reference to what I'm going to give you. So make sure you have your, if at all you need to write, you have your notebook or whatever. But the session will be recorded, so I don't think if someone might need that. But if you want to save on your time, then it's advisable to do that. Yeah. So basically, like I said before, market structure is the foundation of this system. Yeah, this is what some call order flow, because that is how I'll attach it to order flow so that it can make sense as one thing. Yeah, but basically it's just pure market structure. So from a layman explanation, market structure is just how the market prints out, right? Because under market structure we have the market profile. That is how the market prints out the breakout structures, the order blocks. Then under market structure is just basically how the market makes the higher highs, higher lows, lower lows, and lower highs. Yeah, so it's not something complicated, but some of you usually make it complicated. And try as much as you can for you to understand this market structure, because once you understand market structure, then you'll be able to do anything with the system. Okay, and almost in all trading systems that are there outside, they usually deal with market structure, even if some of them don't admit, but it narrows down to market structure. Okay, so after God, I believe in market structure because market structure has always been the way and the truth for the past almost 3 years now. Yeah, I've been trading this system, this same system for that time, and we'll just go ahead. So everyone, welcome, and feel free to ask any question. Feel free to ask any question. So just from the basic knowledge that we have an uptrend. We have an uptrend, or rather a bullish market, right? And we have a downtrend, or rather a bearish market. And again, we have a ranging market, or rather this is just a consolidating market. Yeah, so we have these types of markets. First one being a bullish market, and we have that. So I'll try and go quick. This session won't go past 2 hours, and we have a bearish market. Then we have a ranging, or rather this what most of you call a consolidating. Yeah, this is where we have no pure price intentions. Yeah, so basically they're the things that you usually see on the charts. Either the chart is bullish, it's ranging, or it's bearish. Yeah, it's either going on an uptrend, a downtrend, or just stuck within a range. Yeah, so basically this is what we usually have. So to start with the bullish market, or rather an uptrend market, in this type of market, we are always aiming to form new higher highs. Always aiming to form new higher highs, meaning all the lows, all the lows are strong and protected, and all these lows are required to break a structure to form a new higher high. What do I mean? This low is required to break this high, this previous high, to give us a new higher high, right? A pullback, this low is required to break this high to give us a new higher high. This low is required to break this high to give us a new higher high. And same to this one. Meaning all these lows are protected or strong lows, okay? And all the highs are weak and should be violated. All the highs are weak and should be violated, and all the lows are strong and protected in a bullish or an upward trending market. In this type of market, rather in a ranging market, there's nothing much. It's just ranging, no highs, no lows, just ranging. Then in a okay, before I go to the bearish market, in a ranging market, there's no high that takes out the previous highs. You'll just find out that this low over here has maybe swept this low. This one maybe has swept that one. Yeah, just sweeps. None confirms the real direction of the market at the moment. In a bearish market, or rather in a downtrend, we always expect to form new lower lows, right? We always expect to form new lower lows, new lower lows. Meaning all these highs are expected to break these structures to give us a new lower low. What does that mean? All the highs in a bearish market are protected or strong. Protected or strong highs, protected or strong highs. So protected or strong swings, or rather levels, are not to be violated. If they're violated, they will have a change in trend. Okay. So whenever you see us talk about protected or strong, just know that we are in that. Whenever you see our charts talk about protected or strong lows, just know we're in a bullish market, and all the lows are expected to give us a new higher high. That applies to the bearish market. I hope that is understood. So, and I've said, you'll if a bearish, or rather if in a bullish market, if a strong high, sorry, if if a strong law is violated, that's where we have a trend change. When a bullish market, then this happens. So if this happens, because this pullback, we expect it to react from this zone and give us a new higher high. But you find that now that happens, then I don't know what is happening to my whatever. You know, it stops drawing from. Let me see again. Okay, so when a protected law or rather a strong law is violated, then that's the point that we'll have a trend change. We now change from the bullish trend to the bearish one. Okay, so this is how we always have a trend change. That is when a strong law is violated and price goes lower, pulls back and continues the new trend. So price comes from a bullish trend to a bearish one. In most cases, people call this an IBOS. Some call it a chalk. Yeah, but when price goes in the opposite direction, when price breaks structure to the opposite direction, that is a trend change. We were bullish, price breaks structure to the downside, that is an opposite direction, meaning now we shift bearish. So that's how we come up with a trend change. So basically, these are the normal knowledge, or rather the basic knowledge that you guys usually know about market structure. So market structure is a bit huge. Yeah. So if you check on the advanced part, we have three types of structures. We have the swing structure, we have the internal structure, and we have the fractal structure. So we have the swing, we have the internal, and we have the fractal. So these structures over here, they usually serve their purpose. This structure over here usually serve their purpose. So for the swing structure, that is the bigger structure. Actually, it serves nothing because it just gives us the bigger picture of price. Then we have the internal structure, and for the internal structure is the internal of the swing. Okay, and it only confirms the swing pullback or swing continuation. Okay, so the internal confirms the swing pullback or the swing continuation. Then the fractal confirms the internal pullback or the internal continuation. So this particular, let me increase the size. So I've said this fractal will affect the internal and internal will affect the swing. Okay, so fractal will confirm the continuation or the pullback of the internal. The internal will confirm the continuation or the pullback of the swing. It's very simple. It's not complicated how maybe I'm putting it. When we go to the charts, let me first explain with a line. Let's say we have this leg. Something like this. A pullback, a continuation. So assume this is a swing leg, okay? A pullback, a continuation, a pullback. So let's try and create the something like that. Nice. Nice. Okay, then price gets to the okay, maybe that. Nice. Something like that. Then so I know most of you are familiar with these. So what I'm trying to draw are all the three types of structures. That is the swing, the internal, and the fractal. Nice. So we have this leg over here. This is a bullish swing break of structure, like that. Let's have it as a swing break of structure. So this is the low. So sorry, in this particular market, we are bullish. That's the first thing. We are bullish because you can see price is breaking structure to the upside, right? Meaning we are bullish. So let's have our arrow. We are bullish. Nice. Price is breaking structure to the upside. So you have your first strong low over here. This low is protected. Why? It broke this structure and gave us a new higher high, right? So at the moment, assume you never had this price action at this point. So up to that point, we have this leg, right? We are expecting a pullback after every break of structure. So I've said we have the swing, we have the internal, and we have the fractal. This is the swing, right? Now we want to check on the internals, and I've said the internal will
All
confirm
right,
the swing
earnings season.
pullback or the
You
swing
know what
continuation,
it's like,
and the
right?
fractal will confirm
It's
the
this
internal
quarterly
pullback or the
flood of
internal
numbers,
continuation.
press
Okay, so
releases,
what I mean
and
is
let's be
we
honest,
have
a
this
ton of
as our
jargon.
leg.
But if you look
Then
closely,
inside it we have a
underneath all
fractal,
that
like
noise,
now this
there are
one.
these really powerful signals about where the economy is really headed. So today, that's what we're going to do. We're cutting through all the static to bring you the 5 biggest, most important trends that define the first quarter of 2025. So here's the game plan. We're going to kick things off with the incredible AI gold rush and see how it's bumping up against the new reality of global trade. Then, we'll dive into how those two massive forces are creating this split-screen economy for all of us, for consumers. From there, we'll zoom right into a high-stakes battle raging in healthcare, before wrapping up with the playbook corporations are using to, well, survive in this pretty complicated world. Okay, let's dive right in. Our first trend. It's less of a trend and more like a rocket launch. I'm talking about the race to build the actual, physical foundation of the AI revolution. And honestly, there's no better way to capture the sheer energy of this moment than this quote from NVIDIA CEO Jensen Huang. The demand for AI isn't just growing, it's accelerating. It's hitting a turbocharge. And that is forcing the biggest companies in the world to spend, and spend in a huge way. And when I say spend big, the scale is just staggering. Just look at this number. $75 billion. That is Google's planned capital expenditure for this year. For 1 year. It's a colossal all-in bet on servers and data centers, all to power their AI ambitions.
Well, that kind of spending creates this massive ripple effect, right? When a giant like Google opens its wallet, a shockwave just blasts through the entire supply chain. And you can see it right here. Look at a company like Broadcom. Their revenue just surged 25% year over year, and it's pretty much all fueled by this insatiable demand for AI components.
And this is not just an isolated thing. This is a coordinated, sector-wide arms race. You've got Oracle building these absolutely massive GPU clusters. You've got Cisco blowing past its AI order targets way ahead of schedule. Then there's TSMC cranking up chip production because demand is so strong. And Meta, they're already seeing their AI tools used by nearly 1 billion people. Everyone is building, buying, and deploying at a furious pace. But while the digital world of AI feels kind of boundless, the physical world is actually seeing new walls go up. And that brings us to our second big trend, this challenging new reality of global trade. This quote here from the CEO of medical device giant Abbott, it's just so telling. The entire mindset has shifted. Companies aren't looking at tariffs as some temporary political thing anymore. Nope. They see them as a permanent feature of the business landscape that they have to manage for the long haul. And this isn't just one industry's problem. This concern is absolutely everywhere. You can see it across all these different sectors. You've got JP Morgan noting its clients are shifting to a much shorter-term focus. GE Aerospace is building more conservatism into its financial guidance. Cisco is actively modeling how tariffs are going to impact them. This is a top-of-mind issue for basically everyone. So the crucial point, the big takeaway here is this. Companies are fundamentally changing how they operate. You hear it from Eli Lilly's leadership, who said they decided years ago to move away from just pure efficiency and start building for resilience. It's not just about finding the lowest cost anymore. Now it's about security, it's about redundancy, and just like Abbott's CEO said, it's about getting your manufacturing as close as you possibly can to your customers. Okay, so these massive global forces, all this AI innovation on one side, all this trade friction on the other, they're having a very real impact on household budgets. And that leads us straight to our third trend. A stark and growing divide in how we, as consumers, are behaving. I mean, you really can't get a clearer snapshot of the U.S. economy than this statement from the CEO of McDonald's. It's not one story out there, it's two. High-income folks are still spending, but low-income consumers, they're pulling back sharply. And, as he pointed out, that pressure's now starting to creep up into middle-income families too. And you can see this split so clearly in the data. On one side, you have Bank of America reporting that the account balances for their high-income clients are up a healthy 5%. But then on the other side, you hear executives from companies like McDonald's, all the way to PPG, talking about how low and middle-income families are really getting weighed down by the cumulative hit of inflation. So let's drill down into one of the most dynamic sectors right now, healthcare, because this is where all these forces, innovation, global supply chains, consumer costs, are all colliding in a huge battle for a multi-billion-dollar market. So the war for the obesity drug market is really playing out in 3 acts. Act 1, companies like Eli Lilly and Novo Nordisk create these absolute breakthrough medications. Act 2, they launch an all-out war for market share, for doctors, for patients. But Act 3, that's the trickiest. That's where they have to face the powerful gatekeepers, the pharmacy benefit managers, or PBMs, who ultimately decide which drugs get covered.
You can just feel the tension in this quote from Lilly's CEO. So a major PBM decided to exclusively cover their competitor's drug, and he's basically questioning a decision that limits choices for patients and for doctors. It's a really high-stakes chess match with billions and billions of dollars on the line.
And this number right here, this shows you just how incredibly high those stakes are. This is the year-over-year sales growth in Danish kroners for Novo Nordisk's obesity care division. 67%. That is an explosive, category-defining level of growth, and it explains exactly why the fight for every single prescription is so intense. Okay, so we've seen a technology boom, rising trade walls, a divided consumer, and just fierce industry competition. So how are corporate leaders actually responding to all this? Well, that brings us to our final trend, the modern corporate survival playbook.
In this kind of environment, companies are basically spreading their bets. On one hand, you see massive share buybacks from names like Walmart and Exxon to get cash back to shareholders. You see dividend hikes from Oracle and Chevron. But at the same time, you see these huge investments in the future, like AbbVie's R&D spend and Google's CapEx, right alongside a super sharp focus on efficiency and cost controls at companies like SAP.
So the crucial point is this: when the big picture, the macro
it has pulled back this demand zone, and it's actually at the last demand zone to hold the price. If at all this swing strategies to remain bullish, what do? When price gets to this point, you can't just take your trade aggressively from this point, right? You have to wait for the internals to shift in line with your swing. Remember, at this point, you are bullish on the swing. The internals are bearish. So what do you have to wait? You have to wait for the internals to shift in
Yes,
line
hello, yeah, I can hear.
with your swing order flow for you
Nobody's
to
there.
be able to buy comfortably, right? Yeah. So that's what you have to do. So that's what I usually call an order flow realignment. That is when the internal and the swing align in one direction. That's what we call an order flow realignment. In most cases, you'll see people writing it as
Okay.
OFR.
So there was not a meeting today.
When both swing and the internal are aligned. If they're bullish, they're both bullish. Not that the swing is bullish, the internal is bearish.
Okay.
If they're bullish, all are
You.
bullish. If they're bearish, all are bearish. That's what we call an order flow realignment. And that's when the probability of your trades
Okay.
increases. If at all
Okay,
you
bro, bye.
go in line with that trend.
Bye.
Okay. So
Mm.
I hope you've understood the
Leo
concept of the
Sensei
premium,
left.
discount, and equilibrium. So I've said it's only advisable. It's not a must actually, because price can pull back to around this zone above the equilibrium and continue buying. Okay, but it's advisable to start buying once price pulls back to around AQ, that's the equilibrium, or below, that is the discounted. Okay.
environment is this uncertain, you have to focus inward. You double down on the operational efficiencies you can actually control. You invest in the core innovations that are going to secure your future, and you reward the shareholders who are sticking with you for the ride. It's a really pragmatic, resilient strategy for some very turbulent times.
And all of this leaves us with this final, really critical question. We are watching these powerful, often contradictory forces pull the global economy in completely different directions. You've got the boundless, deflationary promise of AI on one side and the constrained, inflationary pressure of trade friction on the other. How these two forces balance out, how they resolve themselves, that is going to be the story that defines our economy for years to come.
Then did that, came here, failed to give us a new low from this supply zone, reacted, pulled back. This pullback failed to take out this weak low over here, and it gave us a shift. So what I'm trying to explain is very simple. I'm just trying to explain the failed reactions. So they are the lows or highs that we usually call as FR. Okay, they are the failed reactions. Let me just label them. So these ones over here are the failed reactions, and there are another confluence that will be added. Let me just okay, this one over there. So a failed reaction is a high or low that failed to meet an objective. Okay, is a high or low that failed to meet an objective. This low over here failed to give us a new higher high for this internal structure. This high over here failed to give us a new lower low for this internal structure. That's a failed reaction, and it's an added an added confluence when you are following prices. Okay, yeah, I hope that is understood again. So basically,
Welcome
this
to
is
the
what
deep
we're always dealing
dive.
with on chart. The only difference is
So
that
today we're
chart is
digging
not
into
using
your
direct.
sources,
It will be so much
mainly
confusing.
Arthur
You
Brooks's
don't know
How
where
to
to
Build a
start, you
Life
don't know what you're doing,
columns from The
but
Atlantic.
it's very simple.
Right, and we're also weaving
Manipulation,
in some
Some wisdom
Or
from
maybe
classical
you'll ask
thinkers
questions later.
too.
You'll ask questions later.
Should be
So
interesting.
we'll cover
Definitely.
the
We're
swing, what is the
aiming to
internal, what
extract the
how
key
from
insights
pull
here.
back
You know, think of it as a way
for the
to
swing,
cut through all the
how from
noise
pull
about
back
living a
for the
fulfilling
internal,
life.
Because
how
you've
to
shared these
confirm
probably
the
looking for some
start of the
real
swing
practical
continuation,
guidance.
and how to
And that's the
confirm
goal,
the
right?
start of the
Actionable
internal
stuff.
continuation.
Exactly.
Let's
And
say
what's
the
interesting is
first one
Brooks, you know, he's
will
a social
confirm
scientist, but he
continuation
often
of the
seems to
pullback
be
of the internal
exploring
structure, and
things
the internal
that,
structure will confirm
well, that
the
resonate
continuation
personally. Like he's
of the
figuring
pullback
things
of
out
the
for
swing.
himself too, which I think we all do.
I think that is
Absolutely.
really
That personal
So,
angle
I
makes
don't
his work
expect
really
you to
relatable.
forget or
He's
lose
grappling with
that.
these
So basically,
fundamental
what we'll
human
do now,
questions
I
that
want to try
philosophers have been
and
tackling
go
for,
to
well,
maybe
forever.
It's a great mix, that contemporary view
attack,
and the
but
classical background.
Yeah, I think that blend is where we
like
find
that.
some
Let's
really
maybe
profound
what's that?
takeaways.
I'll talk
Okay,
about
so let's dive
all
right in.
market
One
profiles
piece that
and the
really
market
jumped
structure.
out was from
Yeah, and I see market
May
structure, basically how the market
2022.
plays out.
Brooks
That is
talks about
the
midlife.
higher
Oh,
highs,
right.
higher lows,
The
higher
two
highs, higher lows,
choices that keep a
right?
midlife crisis at bay.
And
Yeah, that one.
that
He
is
kind
market
of flips
structure.
the script, suggesting
And
middle
I've seen the
age
market
isn't
profile
just
is basically how the
decline,
market
it could be
prints out
this
the cycle
chance
structures,
for
right? The order profit,
transcendence,
it
he
gives the
calls
high
it.
And what's
balances.
cool is how he
So what
uses
we'll
his
do
own
now,
life,
want to go to
right? Like
live
turning
chart,
58 becomes
and
the
maybe we'll
starting
check on
point for his
USD.
research into it, his
Sorry,
me
let's
search,
use
as he puts it.
USD.
Which feels very authentic.
It does. And, thinking about the classics, Seneca comes to mind. He was always talking about how fortune changes, how even powerful people face huge shifts. He even suggested that seeing trouble in, like, palaces can weirdly make our own problems feel easier to bear.
Like a shared vulnerability across time.
Exactly.
Yeah.
So does that suggest there's something inherent about that midlife point? A natural time for reevaluation, maybe, no matter the era?
That's a really good question. Is it just a modern thing or deeper?
Hmm.
Brooks also hits on something else, this constant need for external validation.
Yes.
In Stop Keeping Score, he basically says chasing prestige, money, social standing. It actually makes us less satisfied.
That's the scorecard approach. And it feeds right into that, that hedonic treadmill idea.
Explain that a bit.
Well, you chase something, a promotion, a new car, whatever, you get it, feel good for a bit, and then that feeling fades. Right? So you need the next thing, the bigger box, as Brooks says. Your desires just reset.
Always chasing.
Always chasing. And the Seneca saw this too. He argued those external things, wealth, status, they aren't really us, they're temporary.
Like tools, not the core.
Precisely. He used this analogy of them being like auxiliary troops in a camp. Useful maybe, but servants, not masters. He was all about finding confidence within yourself, in your own spirit. That's the real anchor, good times or bad.
It feels like running a race where the finish line just keeps moving. Which brings us to happiness itself, something Brooks explores a lot.
Yeah, and its potential pitfalls. I remember him talking about this with Dan Harris.
It makes me think of Plato, actually. In the Philebus,
Hey,
he
what's up?
really
Feel free-
dissects
Hey.
what pleasure even
Hey,
is.
hey
Oh,
there.
absolutely.
I've got a really
Plato's
great feeling
Philebus
about
is
us
so
teaming up.
relevant here.
How can I jump
He
in and help?
suggests pleasure
Hi
is
there.
often just
Hey,
a
how's it
generation,
going?
like a
I'm
process
looking
of
forward
filling
to
a
working
void.
together.
Not a
Hi
stable
there.
state of
Nice
being.
to meet you.
Right. Think
I'm
about
ex-
Hi.
scratching an itch. Is
Hello.
that happiness
It's
or
lovely
just
to meet you.
relief from
If there's
discomfort?
anything you
Good
need,
point.
please.
And then there's that brilliant
This being our swing over here. This is the law that broke up that structure, right? So
Hey,
Just vibing here, so basically I'm ready to
Move
dive
to
into whatever
private.
you've got in mind. No sugarcoating, straight up Gen Z style. Feel free to toss any wild or forward-thinking idea at me and I'll hit you back with something playful and a little goofy. Let's go.
Now you have to confirm your week. Hi, what did I say? You check on the internals. What is happening on the internals? You check on the
Alrighty,
internals,
we're
shift
in
against
business.
your swing. At this
Just
point,
picture me
swing
as
switch.
your Gen Z buddy who's a
Yeah,
little
yeah,
quirky,
yeah.
always ready to think outside the box, and definitely not afraid to drop a quick joke here and there. So whatever you've got, toss it at me and we'll keep it fun and fresh.
Right? So our internal was these ones. Pull continuation, pull back, continuation, pull back, continuation. So there was our range. Then it shifted bearish. So that was the confirmation that now the swing pullback for this range has already started. And we can comfortably mark that high as our week.
Gotcha. Let's dive into it. So, straight up, if we're talking about trading and then all the other stuff around it, think of it like this. The actual buying and selling is just one piece of the puzzle. The other big chunks are stuff like keeping your mental game strong, basically making sure you're not letting stress or FOMO wreck your vibe, and also having a plan for your money so you don't just YOLO everything into one trade. Plus, staying curious and always learning new tricks of the trade is like the ultimate life hack. In other words, yeah, focus on trading, but also focus on keeping your head in the game, your risk in check, and your knowledge on point. Keep it chill, and you'll be golden.
Now these are our new swing range. Should I give these names so that you don't get confused? These are swing boss. These are the swing boss now. So up to this point, you have your swing low. You have your swing low. but you don't have your swing high, right? You don't have your swing high. So you have your swing break of structure. Now you have to confirm your swing high. What did I say? You check on the internals. So you can see the last internal structure over here was this one. Okay, it wasn't taken out. Pull back, continued. So our last internal break of structure was this one, and our last internal range was this one. So until this was taken out, it confirmed that now we might be ready to continue the swing bullish trend. So that bearish internal structure to the downside confirmed this high over here as our weak swing high. So we have our high over there. So up to that point again, we have our swing structure, a defined one. Okay, and this over here being our internal break of structure to the opposite direction. Nice. Okay, so what do we expect up to that point? We are bullish. We are still bullish. We expect a pullback, maybe to that level, or maybe deep, then a continuation. But you can see that didn't happen. What happened? Price shifted bearish, invalidating this strong swing low. This gave us a trend shift on the swing. So up to that point, we shifted bearish. Remember, in this leg,
Yeah, totally a fair question. So just to keep it real, every time we chat like this in voice, it's kind of like using a handful of tokens for each chunk of conversation. It's not a crazy amount or anything, but yeah, each little back and forth does nibble a bit of token usage. Basically, we're not talking a huge bunch of tokens, but just a little snack every time we have a convo. So no stress, we're just vibing, and it's all good.
Right? So let me give this a name. Bearish swing break of structure. So up to that point, we have this as our new leg. Remember, you just broke this structure to the downside.
Yeah, totally. Let me break it down for you in a super chill way. So basically, when you're doing the whole voice chat thing, it does chew up a few more tokens compared to just typing it out. The reason is basically that turning your speech into text and then back into speech on my side is just a bit more of a snack for the system. But it's not a huge deal. Kind of like voice chat is a slightly hungrier little gremlin than text chat. So yeah, if you're just typing, fewer tokens. If you're chatting with voice, a few more tokens. But either way, we're good to go.
As our weak swing low, and the swing pullback has now been confirmed. So up to there, we now have a defined swing range running from this high to that low. Broke this structure. We already confirmed the start of the pullback. What do you expect? The pullback to run around this zone, or maybe deep premium levels before we continue selling? Okay, yeah, it is the same concept that I was explaining to you guys. Let me delete these ones. On when I was explaining this on the lines, you have your low, or rather you have your high to your low, right? You know very well that now you are a bearish trend. Below the equilibrium is now the discounted levels, and above is now the premium. Assume you are selling a product. You are selling a product. This product usually sell it at 500 bob, 500 bob, 500, right? This product, the price usually falls to around 250, and it always goes to around 750. You as a seller, where will you choose to sell your product? Either the normal pricing, the 500 shillings, or you can choose to sell your price, the best price, that is the premium price. So any price above the 500 is above 500. A seller might want to sell, but a seller will hesitate selling below the normal 500 bob, right? So we only sell at the premium levels. Yeah, so I'm trying to use normal day examples so that you can relate. Yeah, so at this point, we expect the pullback to go to around equilibrium or premium levels before we continue with the selling, because we're already bearish, right? Yeah, so what do we check again? Let me get rid of this now. Nice. So what did price do? Price pulled back. Nice. Did that. It tried continuing, but it failed. It failed, and it shifted again. Bullish. It shifted again. Bullish. So up to that point, this previous swing week low took out this strong swing high, giving us this as the bullish swing break of structure initiated by this low. So this low is now our strong swing low. Okay. This is now our strong swing low. Nice. This is our new bullish swing break of structure. And now to that point again, we've shifted what? We've shifted bullish. Bullish again. Okay. We shifted bullish. What do you expect? Where is our range? Our range is running from this low all the way to this high. We expect a pullback and a continuation. Is it understood? Yes, it is. So price did that. So okay, let me just explain the same concept. You have your low, it has broken this structure. You have to confirm your high, check on the internals. You can see what the internals were doing. Shifted bearish at that point. So that already you can use that to confirm that high as your weak swing high. So our range is defined, that one. A pullback, then we expect a continuation. you can see already the pullback is just enough and the continuation had been confirmed. So let's extend this because this is the last structure and this is a weak swing high. Okay, so whatever happens on this daily time frame will happen on the higher time frame, will happen on the middle time frame, that is the M15. Price is fractal. Whatever happens on the higher time frame happens on the lower time frame. Okay, yeah, so it's just that simple. So maybe if some of you are always getting confused, when are we confirming the continuation of a swing? The same thing how we confirm the pullback. We confirm from the internals when we have an order flow realignment, because the swing is bullish. Now you want to confirm the continuation, check on the internals. You can see they shifted at this point. So that shift over there, confirm the continuation, right? Simple. Simple, very, very simple. So we have our swing. We have our swing. You can see how our swing was running. Pullback, continuation, shifted bearish. Pullback, failed to give us a new lower low, shifted bullish. Pullback, now we're anticipating to give us a new higher high. At the moment, the swing order flow is bullish. It has already created the swing pullback, and now we have an order flow realignment ready to target the swing, weak swing high. Okay, so weak swing high. Weak swing high. Nice. So let's check on the internals. So I'll go first on the internals because I've talked about them from this structure. From this structure. Let's start from maybe this zone. We had this as our last internal break of structure to the downside. So I'm mapping the internals with the dashed. Then there was the high that broke the internal structure to the downside. It was taken out. You can see. Price pulled back, continued with a new break of structure over there. So I'm mapping the internals, okay? All right. Continuation. So price went pulled back. We had this. Price went pulled back. We had this. So up to there, we never had a break of structure. So our last break of structure, okay, we had this one. This high was taken out by that. Then a pullback, a continuation over there. Then this is the low that took out that high was invalidated, so it was violated. We shifted bearish on the internals. So up to that point, our internal range was this one. Okay, then we shifted bullish at that point. The internals are continuing, so these are our internals. Don't confuse the internals with the swing. Then this is the low that broke this internal structure. We shifted again bearish. Then this is an internal break of structure. Price continued bearish. We'll map these. Price came up to this zone before pulling back. Then this is the high that took up this low. We shifted bullish. After the internal shifted bearish, after the internal shifted bullish, we had internal bullish continuation. Okay, break of structure, pullback. Okay, pullback. Okay, price came to this zone. Okay, we had the next one at that point. Yeah, it broke that structure. Yeah, though it was really, really slight. I know I'm not that accurate, but and I'm trying to save time because I know you guys already. Yeah, then again, now this is the low that broke that structure. We shifted again bearish on the internals. Then bearish continuation. Nice. And then pullback. This is the high that broke that structure. We shifted again bullish. This is the low that broke again. We shifted again bearish. So you can always just follow these internal structures this way. Then again,
Voxen moved to private.
This is our immediate internal range. Okay, we expect a pullback and a continuation. It never happened. We shifted again.
You got it. So basically, that's the lowdown. It's all pretty chill, and now you've got the scoop. If you've got any other questions, just toss them.
So a pullback, a continuation. A pullback, a continuation on the internals.
Example video.
Then shifted again bearish on the internals. So you can see over here, there was a break of structure, but it didn't confirm the internal low. You can see after we shifted here, now this is a new internal range. So a new break of structure. Price continued.
அது வீடியோ வருங்க.
Yeah, you can see this leg. Pullback, continuation, pullback. Yeah, so we have this like that. Then this pullback failed to give us a new lower low. What happened? We shifted bullish. That's the point we had an order flow realignment. Yeah, currently, let's see what happened. After that break of structure, what happened? We had this slight shift, confirm this as a structure. Okay, and currently this is our strong internal low. And this is our weak internal high. Currently, we're on a pullback and we expect a continuation. Simple. Is it complicated? No, it's not. Yeah, so let's get back a little bit. So let me say you are in this price action around last year, it was a 2024 price action. You need to get engaged in the swing bearish continuation. So this first bearish shift over here of the internal will have told you that now you can enter this point. It failed. This guys got invalidated, got liquidated. Price again shifted bearish. So this was the first order flow realignment for this bearish swing leg. So the internals again shifted in line. So this pullback, technically we're anticipating this pullback to continue this bearish swing, but it failed. Okay, yeah. So that's what I said. The fractal will confirm the continuation of the pullback of the internal, and the internal will confirm the continuation of the pullback of the swing. Is it complicated? No, it's not. So what I want you guys to go do, should we go to the, okay, we just consume around 1 hour. Let's do something for, let's do this same structural mapping that we've done on the DTF on the higher time frame. So let's store this. Let's store this. So this is our DTF. Nice. So let's do this on the HTF quick. Then I'll give you an assignment. So we are on the HTF. HTF is our higher time frame. So, but I don't really want to do this because I should tell you guys that in most cases, to that our internal structures on the daily will be our swing on the H4. But anyway, let's just do for learning purposes. So you can see whatever is happening on the higher time frame. Let's just get it from here. I think it's just okay. Let's just get it from this zone. Okay. Our last swing break of structure on the higher time frame was this one. So this is the swing, not on the higher time frame.
Right.
Okay.
Tell me the way to set up
in any case, you experience
multi-streaming in Obis.
or rather, you just let me know if at all my screen disappears, my voice starts cracking. Just let me know. Yeah, and I'm trying to go as fast as possible because I tried to go slow when I was giving the foundation. Right now, you guys are aware what we're doing.
Okay.
So we're mapping the swings on the H4. Okay.
Okay.
And let me zoom in. Okay, so
Left.
joined on all sides. So we had this swing leg. What do you expect after break of structure? We expect a pullback. Let me give them names. These are swing boss. After a break of structure, let's expect a pullback. We had that pullback, then another break of structure to the upside. So we had a new swing break of structure by there. So I'm not giving them names again. You already know that complete lines are for swings.
Welcome to The Explainer.
So up to this point,
You
this
know,
low, this
every
low,
single
this high,
price
right?
chart tells
Then
a
we expect
story.
pullback and a continuation. So up to there, this low is our strong swing low, and this high is our weak swing high. Okay, so what happened? What did price do? Price was laid for so long, then it shifted bearish at this point. You can see this candle, because I said a break of structure, we must have a candle body close. Okay, we have two types of break of structures. We have that which closes with a wick, okay, and we have that which closes with a candle body close. For a complete break of structure, or rather a valid break of structure, you must have a candle body close. For the ones that we have a wick close, wick is these ones, okay. We call them aggressive break of structures, and that type of structure, or rather that type of break of structure, is only being used to map the change of characters or the chalks. Okay, only use that to map the chalk, not the break of structures. Are you guys getting me? What I'm trying to say is this: you see this first sweep over here. Where is that tool? This sweep over here, you can see there was no any candle body close down, right? So this is not a break of structure, rather it's a chalk. This is the first confirmation that we're likely to continue bearish. Okay, this is the first confirmation that we're likely to continue bearish. So this, you can map a chalk like that with a candle wick close. Okay,
இதுல சார்ட்ல வருமா என்ன?
I hope that is understood. So for break of structures, you must see a complete candle body close.
இல்ல ஃபுல்லா
This is the
பார்க்கலையா
high
நீ?
that gave us the break of structure. That's now up there. We have shifted bearish. That's a strong high. And this is our swing range, right? After break of structure, always expect a pullback and a continuation. So the pullback was given, price continued to the downside. Nice. After break of structure, always expect a pullback. So up there,
விண்டோஸ் இந்த
we have
சப்ளை
this
டிமாண்ட்ல
high
இந்த சார்ட்டை வச்சு எக்ஸாம்பிள்லாம்
shifting to this
சொன்னால
now,
அதே
right?
மாதிரி
That's the
இதுல
high that
இருக்கான்னு
broke
கேக்குறேன்.
this structure. What do you expect? A pullback, continuation. What happened? Price shifted bullish. So up to there, these are weak, swing low. These are our range. Yeah, price shifted bullish. So giving this low now as our strong swing, and this high over here as our weak swing. What do we expect? Because now we are bullish. What do we expect? We expect a pullback and a continuation. Let's see what happened. It never happened that way. Again, we shifted what? We shifted bearish. So this weak high over here shifts to be strong. Now we're looking for our internal. Sorry, our swing weak low. It's over here. I said you check on the internals when the internals are shifting against your swing. So what do we expect after that point? We have our range. We expect a pullback, then a continuation. Let's see what happened. What did price do? Let's extend our lines. So all these lows inside here are just the internal. Okay. So you can see what price did. Again, it broke to the downside. This being our strong swing low. A pullback, a continuation. So our strong swing low shifts from this low to this one. Nice. And I'm actually seeing you guys when you're okay. Let me just finish first. A pullback, continuation. So we have that as our new swing. So this low shifts from this one to that one. So up there, we have this as our swing structure. What did you expect? A pullback and a continuation. It didn't happen. It shifted bearish. So that shift gave this weak swing high to be a strong high, right? So what to look for? Sorry, want to look for our weak swing low. We check on the internals what happened. So you can see we had these shifts over here. So you know what I did over here was that the pullback never got to around the EQ or rather the premium levels, but I couldn't take the entire this as one leg. Okay, yeah. So that's the reason why I just took this first chalk on the internals. You can see it over here. Then I map this as a new swing structure. Yeah, hope that is understood. Then this is our new high. Our next low is let's see. We check on the internals again. There's no. Yeah, so you can see what happened over here from this high, from this breakout structure. Internal shifted bullish over there. So you can confirm this as a new low over there. And remember our high is this one. Okay. My mouse is not picking the tools now. It's tired. Anyway, let's just get this done. We are almost. For the guys who are getting tired, we are almost. It's just 1 hour since we started. And I'm not even tired myself, and I'm not doing the talking and the presentation. So we have that leg, a pullback continuation. We broke, structure to the downside. And now this high shifts from there to here. Nice. Then a pullback. So I just took this as a pullback. I never checked on the internals. Then this high now shifts to this one. Nice. Then price did that. Instead of price giving us a new lower low from this high, it shifted bullish, right? Yeah, so up there we have a swing bullish breakout structure there. Then we have this swing swing strong low. Okay, let's continue. A breakout structure, a pullback. So you can see we had this internal shifting over there. So to me that confirmed that now this high is a swing high, and our new low will now come from this one, the one above. Nice there. So currently this is the structure I have in terms, let's see, and this high like that. So you can see the internals are already bearish, like that. So at the moment this is our swing range. The internals are bearish to facilitate the swing, pull back, then a continuation. So what I was trying to tell you guys is that in most cases you realize that your swing on the high time frame will be your internal on the day time frame. What I mean is that, let's say, okay, let me first, okay, before I do that, let me unhide the daily so you can see.
Move to
You can see
general
what I'm
number
trying to say.
1.
If when I unhide the daily, you can see the daily internal is this one, but on the high time frame, it's our swing. But it's not a must, like that concept is not guaranteed. In other cases, it will be different, but in most cases, it will always be like that. Yeah. So for the internals, so I don't want to go that much back because I know most of you. Okay, let me just go back much, and it won't last even 10 minutes. Let's maybe start from maybe this low to confirm this high.
Why would I need to do that?
We back, yeah, that's our internal over there. We'll map this as an internal. Maybe here we had a breakout structure, a pullback continuation.
Suryaram joined.
Install my.
I don't know why my mouse now.
Can I just like import or something the
then,
setup?
This one. So you realize these internals on the HTF will be our swing on the 15, then a pullback continuation. Price did that. So I shall take this any slight fractal shift on the internal. I just cover it as a
mic
range. Yeah, just to make sure that I have manageable ranges for my intraday price reactions. Okay. Yeah. So up there again, we shifted bearish on the internals.
Okay.
Like that. Like that. Then we shifted again bullish over there. Then price went to around here. Nice. Then should we cover this? No, let me just cover this. Then we shifted again bearish. Then let's see. No shift, no fractal shift to the upside. So now in such cases is where I introduce the, but technically no there's no any fractal shift to the upside over here, Because when you check after this break of structure, let me just zoom. After this break of structure, what happened? It wasn't really a shift, but I take this as an internal break of structure. Then a continuation. Because if you check on the MTF, you realize that that's a very, very good swing leg, though it does not meet any of our range mapping criteria, or rather PIP rule. So yeah, so basically that's how the internal is running.
Why did you send the link?
Yeah, so what I want you guys to go do is very simple. What I want you guys to go do is very, very simple. And I know most of you have, okay, before I give you the assignment, let's just get this done. Shoot it like that, okay. Yeah, so basically that's our internal structure, that's how it's running. And the same thing that we done on the H4 is the same thing that we did on the M15, right? Yeah, the same thing that we've done over here is the same thing that we did on the M15. So we'll again install these to be our HTF because we'll be using them tomorrow for the institutional supply and demand. Yeah. So I hope you guys have seen what we've done.
I'm planning to
I want you
stream
to do the same
chain
structural
together.
mapping that we've done today on GBPUSD. Choose any broker on TradingView and try and do it outside your broker that you usually use for trading, okay? Because you can see I've not even used the broker that I usually use for trading. I usually use Oanda for my intraday. So use another different broker to do this.
I always wanted to play this game.
Do the exact same thing that I've done. Okay? Try making no mistake. I don't know, should I just print out this there's no need of printing because this is a video. You can always go back to the video and check. You can see my lines are not zigzag. My lines are perfectly straight. My break of structures are perfectly straight. Everything is perfectly mapped. If you give me a different mapping, right? I won't even open. I won't reply, okay? The first thing to do, you already know how we map structures, whatever. Very, very nice. Go and change your chart theme to black and white, what we did. You see like this one, now you change it to black and white, okay? Because we're doing a general structural mapping. When doing a general structural mapping, we don't want to care about the color of the charts being bullish or bearish, okay? We just want to see we have a break of structure, a shift, and this and that, okay? So change your chart theme to black and white, everything to black and white. I hope you can see my charts are black and white, okay? After doing that, start doing your structural mapping from the daily time frame from 2023 January to date, okay? And map the most recent structure, okay? After doing the swing, do the internal exactly they have done, map all the market directions, okay? And how they were shifting and all that. Do it perfectly how I've done. If at all you experience any difficulty, go back to the gallery and open this video. This video is less than 1 hour 20 minutes. Open this video and rewatch. But try and don't make petty mistakes. First thing, make a chart black and white. If you send me a chart that's not black and white, I won't open. Or rather, I won't do what? I won't reply. Then do your structural mapping. Don't map any don't map any order block. Just map break of structures and shifts. Break of structures and shifts, okay? I don't want to see any other block that now price was buying from this zone. Don't do that, okay? That's the reason I've said change your theme to black and white. Okay? Nice. So do that on the daily time frame and on the higher time frame and on the medium time frame. Share with me either on Telegram, Discord, or Telegram and Discord only. Don't message me on WhatsApp. Yeah. And make sure it's a direct message. Don't share it on the Discord community. Make sure it's a direct message.
I was looking my...
It's not a must do this. It's not a must do this. Sometimes most of you have understood what to be done. It's well and good. Tomorrow we'll continue to supply and demand. But if at all you might be having difficulty, do the exact thing I've done from the daily time frame to the high time frame to the medium time frame. Both swings and internals on all those time frames and share with me. So questions before we end the session? Questions before we end the session?